Thanks, Mark. Appreciate you. Appreciate the opportunity. Thanks, Finola. Appreciate your support of businesses like ours and our sector generally in Australia. And listening to those three businesses prior to our opportunity, it's just great to see how much diversity there is in terms of the sorts of sectors and solutions that have got the potential to go global and be fantastic Australian success stories. So I think I was last on back in May, so it's great to be here again. And the presentation I'm talking to today, which Mark hopefully everyone can see, is our quarterly. So it's the front end of the quarterly, which went out earlier in the week. And I'll jump into that. And great again to see some familiar faces of the attendees. Appreciate everyone making the time. So FY24 June quarter. Just a quick recap though, and I'll keep it really brief because I think a lot of people here know the story. Pointerra, we build digital twins, and what's a digital twin? It comprises remote sensing data and design data for built form, for roads, for rail networks, for power, electric utilities, for water utilities, for mines, for oil and gas facilities, for the buildings. Basically, built form anywhere in the world these days is designed in 3D and increasingly is managed in 3D. And what Pointerra has done has solved and cloudified the workflow around a really challenging problem, and that is working with this data, trying to federate it, see it in one place, create a common data environment so that the significant investment in this remote sensing data can be shared and leveraged across the organisation. To give viewers and listeners a feel for the scale of investment in remote sensing data, some of our US customers spend in excess of 30 million US per annum every year acquiring remote sensing data, and that's anywhere from satellite imagery to imagery and lidar collected from planes, from helicopters, from drones. And every other a myriad of different hardware configurations, and that's generating petabytes of data on almost on a daily basis. And capturing the data is not straightforward, but what's even more difficult and levels of magnitude more difficult is managing that data and interpreting it. So we started life back in 2015-16, and first customers the back end of calendar 17 and early 18 with the solution at the bottom, which we now call Pointerra 3D Core, and that's really about creating that common data environment and solving the low-hanging workflow problems, if you will. And as we engage deeper with our customers over the past few years, and led by the success we've had in particular out of the US energy utility sector, we've worked with our customers to help them query and analyze that data now that we've got it in the cloud and adjacent to high-speed compute. And at the very pointy end of our business model is the business insight and the intelligence that we can give at an organization level around risk management and operations, and we're starting to see that come through in some of our newer sectors, more recently mining, and I'll get to that in a bit. So it is a unique digital twin SaaS business model. There's not really anyone out there that's got a business model like ours. A lot of the companies in our space are trying to migrate from that have got some desktop solutions, and we compete with people that use desktop solutions, and sometimes 5, 6, 7, 8 different desktop software products just to process and interpret data. We've taken that laborious, lengthy, error-prone, costly workflow and we've cloudified it. So born in the cloud, and we're on the Amazon AWS cloud environment. And I think one takeaway for people newer to the story is it's not about storage in the cloud. It's about having that data adjacent to infinitely scalable, near infinitely scalable high-speed compute. So we can stand up thousands of instances in parallel to run a massive analytics job that for a time-critical customer, such as the work we did with our largest customer, a power utility in the US who was whacked by a hurricane back in 2022, and we were able to give them answers after a plane had landed and had flown their network and surveyed the damage, we were able to get them answers at a really granular level in a time frame. They were used to waiting days or weeks for that insight. We were able to give it to them within hours, and it's that workflow that we compress that basically underwrites our value proposition and our business model. Our growth strategy, we've tried to be really consistent and focused on this. It's all about people. We onboarded a guy earlier this week who's well known to the business and is he's based in Australia and is going to be a fantastic addition to our BD and sales team. But we've got an amazing platform, an amazing technology solution, and we think the best business model in the world in terms of geospatial workflow. But it only exists because of people. We've got a really a core group of founders and management team that have been with the business a long time. They're all shareholders. They're committed to the success of their company, of your company, if you're an investor. And I can't stress highly enough that the success of our business and the challenges that we face are all about people. I mentioned earlier that we've got some amazing customers, our foundation customers, and it's really those guys that trust us, that rely on our platform to be always on 24/7 with downtime per annum measured in the seconds. And that level of trust and engagement means that they come to us and say, "Hey, can you solve this problem? Can you automate and cloudify this workflow that's painful for us?" And it's really important for us to get that answer faster. As I mentioned before, the US energy utility sector has been our largest. In the last year, we've given some of the challenges we experienced in calendar 2023 in particular, and I guess the first quarter of this year in that space, it led us to make some decisions about investing from a BD and product perspective into different sectors. But what's really important is that we are able to leverage the significant investment we've made in the energy utility sector into those new sectors. But importantly, the work we've done in the energy utility sector over the past few years in the US market in particular is only just starting. We had a great contract win earlier a few weeks that we announced at the back end of June, and I'll come back to that in a minute. But this growth strategy is all designed and was conceived back in 2015 when we came up with the idea for this business. My co-founders, a couple of the Nearmap early management team, and the former CEO of Nearmap, and our tech team who've been with us the whole journey, is to be really focused on scaling what's really valuable to the market, which is recurring SaaS revenue, getting cash flow positive, funding our own growth. So, whilst we've come to the market this year to raise capital, which was frustrating for us and clearly frustrating for some of the shareholders, we've tried to be really disciplined about preserving cash and making judicious investments in people as we scale the business. So to jump to Q4, it was a good quarter in an otherwise ordinary year. The irony is it was ordinary financially in terms of the fiscal year, but there was a lot behind the scenes that we can be really proud of in terms of product development, sector penetration, and importantly, the confirmation that what we've been telling the market for the last 9 to 12 months, which is, hey, the US energy utility sector has sat on its hands for a year while it's figured out how to avail itself and plan for this near on $1 trillion capital investment program that's being underwritten by the Biden administration in a program that's bipartisan, regardless of the outcome of the US election later this year. We've been saying, hey, don't worry, the US energy utility sector is healthy, and so the structural tailwind that we see going into FY25 and beyond is significant, and to some extent, we're scrambling at the moment from a resourcing perspective to service the the existing and new customers that are coming on board in that market. I'm off to the US next week, and we're having a quick 3-day strategy session to focus very much on that US energy utility sector and figure out what we need to do in terms of the US business to scale that from a people perspective and importantly a partner's perspective to take advantage of that opportunity. So Q4 was a real improvement from our perspective. There was a placement in there, which was something we did during the quarter for that $2 million. Pleasingly, there were some great Australian investors that came on board, some existing customers, some funds that we'd seen on our register over the journey had come back for another look. But importantly, just under half of that raise was through a US-based family office, which in and of itself doesn't sound like much, but the principal behind that family office fund used to work at Sequoia and also at Google, and so a really high-profile investor in the US marketplace, someone who looked us up and came to us and said, "Hey." As recently as last November, hey, I'm really interested about your business. I don't know, I'm not quite sure how he found out about us in the sea of SaaS investment opportunities globally, but he did, and that individual's come on board, and as I said, taken just under half of that placement, and for us, getting more investor profile in the North American market, I think it's really important and is going to be a great outcome for all shareholders. We believe that our ultimate acquirer is going to come from that market, and so to get that increased profile is something that I'm really pleased about, and we'll look to build on as we grow the register and make it more make our business more appealing to global investors. The final piece I'd like to talk about here in terms of the highlights is the contract award we announced on the 28th of June, and I mentioned a few minutes ago. We've been saying for a while, and it's our customers have been telling us this. Hey, your platform, this is in the energy utility sector. Hey guys, your platform is one day going to become the standard bearer and the gold standard and the must-have for any energy utility in the US in particular that's using digital twin data to manage their network, and if they're not using digital twin data, they're not best practice, and if they're not using your platform, they're not best practice. Well, we've been saying that for some time, and we didn't think it up. Our customers told us this, and what we were pleased to do during the third and fourth quarter of this year was work with the US Department of Energy to establish a program whereby we're going to work with 3 utilities in the northeast of the country to take our existing solution, so no R&D, take our existing solution, apply it to some sample data from their network, and then have some independent, really high-profile universities fact check effectively or verify that we do what we said we were going to do. And importantly, out of that exercise, whilst the revenue is fantastic, the ultimate prize is getting the US Department of Energy to promote our platform and our solution as best practice, and that's best practice in terms of resilience activities. Resilience activities, quite simply, the investment, and it's measured as I mentioned earlier, it's measured in the hundreds of billions of dollars, and it's got a 10 to 20 year. A 10 to 20 year investment cycle outlook, and it's all about the energy utility networks in the US investing in rebuilding and strengthening their networks as they've deteriorated over time, and they've also been more recently challenged by the introduction of residential solar and batteries and electric vehicles, and then intermittent generation from solar and wind. And so the traditional electric network, which had a coal-fired power station at one end, transmission distribution network to the home and business that's been established for more than 100 years, that model's been turned upside down through underinvestment and plain old degradation of those assets, but also more recently this renewables focus, and that means that the energy utilities globally have to invest. I guess it would be measured in trillions of dollars, and Australia's not immune to make the network more resilient to the effects of climate change, but also to reshape the network through the challenges of the renewables revolution that we're all seeing. So I thought I'd jump in and provide a quick update by sector, because we are very sector driven. And survey mapping was our, when we came out of the gates with customers back in 2017, some of whom, or most of whom, are still customers. I think our very first and longest serving customer is a really high aspiring survey business in Perth, Western Australia, and they've been with us since 2017. And so in terms of the geospatial sector and the digital twin data and the remote sensing data I mentioned earlier, it's this sector, surveying and mapping, that generate the data. And so it's getting those guys on board as customers was our first focus, and indeed the focus for a lot of the early plans for our business. But what we soon realised was that the asset owners were actually more important in terms of financially important for the business, because of the size of the contract opportunity. So whilst a lot of our survey mapping customers are paying us $500 or $1,000 or $2,000 or $5,000 US a month, we've got customers in sectors we'll come to later where the financial contributions measured in the hundreds of thousands and in some cases millions of dollars per annum. But the survey mapping sector is important, and what we're seeing now is our platform is maturing and becoming really well known in this sector, that the hardware people, the hardware manufacturers that sell the sensors that get put on planes and drones and what have you, are increasingly coming to us and saying, hey, we'd like to sell more sensors. That's our business. We've got this desktop software that's aligned to the sensor, but you know what? Our customers are struggling to process the data and interpret the data. And quite frankly, if we're able to help them do that, they'd buy more hardware sensors from us. So people like Emerson, with their world-class hover map solution, and some larger global aerial lidar manufacturers have started to, we've been having conversations with them for a couple of years now, but we're getting to the point now where these people are lining up saying, hey, we'd like to execute a partnership agreement with you. We'd like to bundle Pointerra with what we sell and ultimately become resellers for us, which is for us it's a great validation from a survey mapping sector perspective, but importantly it gives us scale without adding cost to our BD effort. The next sector that that I'd like to just give an overview of is the power and water utility space, and really it's about power utilities. During the quarter, we're working with our existing Australian and US energy and South American and European customers across a range of initiatives, whether it's vegetation management, whether it's resilience program investment, and that's from power station through to transmission network through to distribution network. So across the entire life cycle and asset class of these utilities. We've continued to invest from a product perspective. We've continued to invest in BD and sales and trying to find the right people to sell our platform into that sector, and increasingly being more agile with the reselling opportunities and the sorts of the consulting businesses, whether they are your traditional consultants or industry aligned consultants who are undertaking digital transformation activities for customers in their segment, in their sectors. For us is a great opportunity again to work with those guys. They're at the coalface with the customer. They're trying to bring digital transformation tools into those businesses. Important to highlight and reiterate for people newer to the business that particularly in this utility space, so power, water, road and rail, a lot of the businesses, even the privately owned ones, or certainly the privately owned ones, their revenue is regulated. So these are critical infrastructure assets. And regardless of what country you're in, it's rare that the revenue that they can generate from those assets isn't regulated in some way. So if you've got a regulator, an economic regulator saying, hey, this is how much you can charge per dollar invested or per linear mile of track or what have you, then if you're a public company, you're sure as hell looking for ways to rip cost out of your business so that you can grow shareholder returns. So just like us, some of our multi-billion-dollar energy utilities companies report quarterly to the street. We've got we've got Fortune 500 US energy utility companies as customers, and they have to report quarterly. They're trying to grow earnings, and the principal way they can grow earnings is by reducing their O&M expenditure, operations and maintenance, and the only way to do that in any meaningful way, given that all the low-hanging fruit's been ripped out over the last 20, 30 years since they've been privatised, is to innovate. And so it's I mentioned before, structural tailwinds. This drive to innovate, this digital transformation strategy that's happening across the different asset owner classes, road, rail, power, water, mining, oil and gas, etc. The drive to innovate and adopt digital transformation strategies means that you actually need, the strategy means that you need to adopt, you need to deploy digital twin tools. And so we're really excited about how just how big the opportunity is, how big the total addressable market is across the different sectors. And so for us, we need to be laser focused on preserving capital, growing revenue, doing what we said we were going to do, ultimately funding our own growth. But so the issue for us isn't product market fit. It's not how big's the total addressable market. It's about sales execution. And those of you who've heard me bang on about our business before, you will have heard that. I guess that sentiment. The success we've had in the energy utility sector has underpinned much of what we've done over the past few years. And the opportunity now is to parlay that into the other sectors and take the experiences we've learned in working with customers in each sector to take the platform, build out the analytics deck, build out the business intelligence deck, and end up with the complete Pointerra solution for that sector. And certainly in fiscal 24, whilst the financial contribution wasn't massive, the product, the steps we've made in mining, oil and gas, from a product perspective and a solution perspective has been immense. And a lot of the growth that we expect in FY25, whilst most of it's still going to come from the energy utility sector, we see mining, oil and gas as being a really emerging sector for us, with existing tier one customers where we're deployed at a mine site or on a single oil and gas facility. But the opportunity is to deploy across the enterprise and move from supporting operations at a discrete site into being the standard for digital twin platforms across that organisation, meaning anywhere from a dozen to as many as 50 sites, depending on the type of customer, and that ultimately generates opportunities for ARR of well north of $2 to $3 million US per annum. I guess during the quarter and earlier in the year, we announced that we'd struck an agreement with a Middle East-based systems integrator. So again, one of those partnership opportunities where we can access the significant opportunities particularly in the oil and gas space, but also the energy space in the Middle East region, without having to have boots on the ground there in a formal sense, and working with a trusted partner who's a leader in that market in systems integration and digital transformation. So across oil and gas and mining, a positive contribution and growth during the quarter and the year, but I think an even bigger outlook for us into FY25, 26 and beyond. The one of the hardest sectors to crack is architecture, engineering, construction, and ultimately operation. These sorts of customers by profile represent our largest user numbers, where we've got a global engineering firm who's got hundreds of daily users in our platform. And these engineers and digital engineers are often working with with workflows, desktop workflows around desktop software applications that have been established over the last 5, 10, 15 years. So we're really fighting to change behavior, and the opportunity to grow in this space, and the results we've had in this space during the quarter, but also in the year, have come through identifying champions in those businesses, people who are charged with driving digital transformation, and ultimately helping people see that those desktop workflows that they've become sort of wedded to, that there is a better way. That if you let a platform like ours do the heavy lifting, then you can grow the you can actually grow the earnings and rip cost out of your business, but more importantly, deliver your project on time and on budget, shrink program, and most of the blowouts we see, and we're seeing a lot of it in Australia in the building and in the civil infrastructure space. Managing program is the hardest thing. I mean, we've had an inflationary environment, and there's been shortage of materials and people, and that's led to significant blowouts in cost and program. And a platform like ours is a game changer once deployed across the enterprise in helping shrink workflow, bring back program, and get better results for customers. So that's, I guess, Mark, that's as far as I wanted to go with the with the update today. So I know I've only got a few minutes and I've talked for too long. So do you want to throw the questions at me?
Yeah, look, I think we've kind of got 3 questions in here, but they can all be kind of condensed into one.
Yeah.
You've talked a lot about ARR, but it's not something you kind of report on a quarterly basis at this
Yeah.
stage. So kind of people are wondering, while the revenue
Yeah.
is
When?
going up and the
Yeah.
jaws are going in the right direction, kind of people are
Yeah.
wondering when you're going to
Yeah.
start reporting that on a regular basis, so people can kind of track these new wins, the
Yes.
Department of Engineering contracts starting to
Yeah.
flow through on a revenue basis. So
Yeah.
maybe just touch on that
So
quickly.
sure. So with our quarterly annual revenue and cash flow, historically and presently dominated by in terms of absolute numbers, by a relatively small number of customers. The getting and with those customers, particularly the US energy utility customers, spending with us on a programmatic basis. We use the word program a lot in our business because these are things they have to do every year, except for last year. And so our longest standing customer, the big energy utility down in Florida, we've been working with them since 2020, and we're doing the same. We're doing the same, but more with them every year, and even they didn't pause last year like some of their peer utilities did in terms of their investment in digital twin data and the need to have it interpreted. So what the point I'm trying to make is that these they're programs, and we get them each year, and we've come to rely on them, but it's not pure SaaS yet, and so that's the dilemma. So if we rolled them all in, we'd have an ARR number that I think people would be really happy with. But we're trying to be disciplined about building that ARR number, and we don't want to put it out too early and have to exclude these big customers who work with us on a repeat annual programmatic basis. We're working really hard with them, and with our largest customer in particular, to move them to a multi-year SaaS commitment, and that will have a significant and an outsized material impact on the ARR we support. So I can tell you it's as frustrating for us as I'm sure it is for the investment community to want to track ARR and understand where we're at. And as soon as we're able to, and reliably, then we're going to stick that out there. I think for FY25, the important message and the theme came through in the quarterly, I hope, is that our forecast, our internal budget, and obviously we don't have forecasts in the market, but our internal budget, and it's not dissimilar to what some of the external research, like Research as a Service, has put out there for FY25. We've got a large amount of that in hand. Recent contract awards, customer renewals meant that we, for the first time, we enter the new fiscal year, and obviously we're a month and a couple of days into it, with a large, with a significant proportion of our FY25 outlook already on the books, and just needing to be turned into revenue and cash. So it's the best place that we've ever been financially in terms of the outlook for a year, so early in that year. And so if I can give people, if I can portray that confidence to the market, and then let them know that as soon as we're able to reliably, and particularly this one customer in particular, is being able to include them in the ARR number will I think have the desired result.
And then we've got I'll get one more in here, Ian, if you've got
Yep.
time.
Yes.
Okay, maybe we'll squeeze two in. Can you please describe the most novel innovation that has been built as a direct result of having a close working relationship with, it says lighthouse customers. I'm not familiar, Ian, maybe you.
Lighthouse customers. So a lighthouse customer is I guess is a phrase it's the one that you want to put up on and talk about, put up on a pedestal and say, hey, it's a tier one mining company, it's a tier one oil and gas company, it's a 100 billion US market cap US energy utility. So I think the thing we're proudest of, whilst it hasn't had the most significant financial impact, was with that utility down in Florida, when the hurricane came through in 2022. And really destroyed a decent part of the Florida energy utility network, as well as obviously a whole bunch of other assets and infrastructure in people's houses. Was that we were operationalized by that customer. So this is 2 years ago. So we're in the third storm season now with that customer. They trusted us enough to operationalize our platform, build it into their emergency response plan. So when a storm goes through, the eyes of the country, eyes of the state are on the utility. How quickly we get people's power back on, because without power, everything else is really challenging. So for that customer to have the faith in us to say, hey, come in, be part of our emergency response. We're going to rely on you guys to tell us where we need to send the trucks to fix the stuff that's broken, because you're giving us insight and a level of detail and accuracy that we've never had before. I mean, that's the best thing we've ever done in terms of the level of trust. I mean, we're trusted by our organization, by our customers to host their extremely valuable digital twin data. A lot of it's critical infrastructure assets, so it's a big step to give us terabytes and petabytes of data in the first instance, but then to rely on you to actually support something that's got the eyes of the world on the, how's this utility going to perform post storm? Yeah, that was a great moment for us.
Okay, and then another one. What do you believe has been the main cause of the delays in the Amazon program?
Yeah, Amazon. We announced that contract in January of last year, so it's coming up 18 months now, and we went off with a real sprint with the first 20 or so warehouses. There's upwards of 700 warehouses to digitize as part of Amazon's preparation for having driverless trucks and other driverless cars inside their warehouse sites. So Amazon's gone, like a lot of other tech businesses the last couple of years, has gone through a number of restructures, and so the program keeps getting pushed back. I think it's the best thing to say, the best way to describe it. It's a program we expect to be involved in for many years. It's an ARR that's going to be measured in seven figures. And I think I said in the last quarterly, we thought we'd have revenue and cash in FY24. Well, that didn't happen. So, but the customer assures us that the program isn't going away. They just need to line up some of the priorities on their side of the ledger, and then we'll be back in there and flying with them.
Okay, Ian, we'll leave it there. Thank you very much for coming back and joining us once again.
Pleasure, Mark. Appreciate the opportunity.
And for getting up early there on your side. Well, not too early over in W.
All good, mate. All good.
Thank you. And thanks to everyone for joining us this morning. And I'll wish everybody a good Friday and a good weekend. Thank you.